Hopefully you can see my screen. Hi again, everybody. Hopefully you can see my screen. I'm on NinjaTrader as well now. It's 9:20 here, 21 minutes past 9. So we've gone through the end of the US session. I've just got the typical workspace here. I've got the three indices. I've got the YM here, got the NQ in the middle, and the ES, the three sisters. They're all on daily time frames. And up at the top, I've got the 5-minute here for the equivalent. And it's really just to get a perspective on where we are on the day. Let's just pop up the ES. There we go. And this is the price action. You might not be able to see it, but basically that's what it's done today. Moved lower and it's recovered, and it's pretty much finished off where it opened the day at just on 3,800. Couple of strong days, reversed off the end of the VPOC here, which we often see when we get to these extremes. You can see it here. This is on the daily. When we get up to these levels on the volume point of control, on the outer reaches of the VPOC histogram itself, it is often a place that you will see reversals come into play, but they've got to be confirmed with volume, obviously. Trend monitor is still saying we're in bearish territory. As I mentioned when I was talking about on pound and the charts there, I didn't have the VPOC, but when you have the VPOC on it, this is the volume point of control. This is the yellow dashed line, which is actually the fulcrum of the market. It is the volume point of control itself. And you can just imagine it like a seesaw. That's what it is. It is the balancing point. When price action gets there, you expect it to congest. It's the point of heaviest volume. You can see it over here. It's the largest volume of the whole chart. And when price action gets to the volume point of control, it will congest. And the reason it will congest is because we all understand support and resistance from a price perspective. That is so ingrained into technical analysts. So that's intuitive. We understand the fact that where we've got price congestion, then price is likely to congest itself when it revisits those areas. The principles are exactly the same from a volume perspective. So when you're looking at the VPOC and the concentration of volume, it therefore follows that when price gets to these very heavy regions, of which the volume point of control itself is the most dense, then you expect the price action to congest at that point. Now, there's a nuanced argument that says part of the reason it congests at that point is because it's a point at which the market has considered important in the past, so therefore it considers it important again. That may or may not be true. But nevertheless, it is where price reaches these levels of high volume, the high volume nodes, in other words, of which the VPOC is the highest, expect the price action to congest. So over the next few days, given on the daily, from a daily perspective, given that we are approaching the VPOC on the ES daily, we can expect, all things being equal, to see some congestion to follow. Equally, when you get to these low volume areas, you've got one here, the price action moves through there pretty swiftly because there's very little in the way of, certainly at this point, in terms of price resistance. I don't know what the shape of the histogram was at that point. It was probably a little bit different to what it is now, but assuming that was the case, if we were on, I don't know, a 5-minute chart, something like that, when you get to one of these low volume areas, you expect the price to move through there pretty quickly. And it's a great confidence builder. This business is all about confidence. If you have indicators or volume or whatever it may be that gives you that confidence to make a trading decision, that's what it's all about. And it doesn't matter whether it's astronomy or whether it's fundamentals, whether it's technical, whatever it is, whatever works for you. And that's what's so important about this business, is finding what works for you. It's like our little FXCM account. We don't intraday trade it, we don't muck about with it, we don't do anything stupid on it. We just focus on a single micro lot trade, 5 or 6 in a basket at a time, maybe 10 tops, something like that. I think we had 11 trades on with a mixture of dollar and a lot of pounds in there, something like that. And we took $200-300 out of that account, and an awful lot more out of the big accounts, I can assure you. And that's what it's about. It's finding what works for you, not what works for me. People say, oh, well, what do you do? It doesn't matter what I do. because it's what works for you, and this is what it's about. It's finding out what works for you. Are you an intraday trader? Are you prefer longer time frames? And that's why on the education program, which applies to both stocks and Forex, is we always urge you to start with the psychology module, because in going through that and taking the psychology tests and what have you and coming out the other end, it will tell you a lot about yourself and trying to match what it is to your strengths and weaknesses so that you too can be successful. Because if you're trying to do something that you don't enjoy, you won't succeed. It's finding that comfort zone where you're comfortable trading, you enjoy it, and then you will start to make money. If you're trying to force yourself to be an intraday trader and you're not suited to it, don't do it, because it won't work for you. It's as simple as that. So that's where we are on the ES. The NQ, very similar. We've actually got up to the volume point of control at this level, so we're expecting some congestion to build there. In terms of the Dow, the YM, it's come up to a little bit of resistance here on the accumulation distribution indicator, which works in the same way as it does on TradingView. So it's got a little bit further to go. You might think, well, don't the indices all travel in the same direction? No, they don't. You get quite a lot of divergence because, and we explained this in part of one of the many things we explain in the stock trading program, is how indices are constructed and why it is that the indices move in different ways on different days. You do get divergence. You will get the Dow rising and you'll get another index falling, and we explain why that is, because a lot of traders and a lot of investors don't understand it. They also don't understand what the drivers are for the indices either, and why and the few number of stocks that actually constitute a massive proportion of the indices themselves, and they are what drives the indices. So of the 30 stocks in the Dow, for example, it's probably 2 or 3 that influence it most greatly. The rest of them do very little. The same is true in the NQ, the same is true in the ES. You'd be amazed, and it's one of the many things we cover in the program. It's a huge program. I can't go through all the various elements of it, but as Anna said, it goes from options. We've got ETFs covered there, obviously stock trading, stock investing. We're trying to cover all the angles for everything, for everybody. There's fundamentals, there's fundamental analysis. It's all the analysis you can do, vertical analysis, horizontal analysis. We've got ratio analysis in there, all the technical stuff, all the fundamental stuff. And in addition to that, it looks at stock investing and trading both from a top level down and from a bottom up approach. So from the top level, you're looking at broad economy, you're looking at bonds, you're looking at very much stuff that is certainly within the Forex program, but again, it's extended out into other areas because the stock market is so much more diverse, and you've got a lot of different instruments to cover and ways that you can attack it. So we've tried to cover everything in there. So that's where we are on the YM. And up onto the 5-minute charts, just now we've closed off. So, we've come to the end of the session. What am I looking at here? I mean, just a little, another little lesson here. As I said, it's all right, we're coming to the end of the session, and you expect the volume to fall away. The market's trying to rally, so you've got a little run up there, and you've got market, and the price action the volume is falling away, so it's not going to go very far, and it hasn't. That's just classical. Get a little bit of buying coming in under here, and we get this little run up, but the volume isn't going very far, it's falling, so it's not going to go very far itself. Now, I can assure you, when you see something like that, if you're in a short position, imagine you're in a short position, you've got in up here, we're on an intraday trade. We've got in somewhere up here, the market's fallen nicely, and we think, great, we've got nice volume under here, great, excellent, only a little bit of a wick under this tail. So, we're still confident. Then we see this candle come along, we see some buying coming in, we think, okay, this doesn't look too great. I wonder how far this buying is going to take us. So we're still sitting tight. Next candle comes in, but that's an encouraging sign. Volume's fallen away. We think, okay, maybe we may be okay here, so we don't need to do anything. Let's not panic. Let's just sit and wait and see. Next candle comes in. Great confidence builder. Tiny volume. The market's trying to rally on tiny volume. For a fact that is not going to go very far. So you continue to hold the position. Now, I can guarantee you most traders would have closed out by now. They would have seen that and gone, oh, they panicked, flipped out the move. That's it, gone, done and dusted. And that's the problem. and it's an immensely powerful application of volume price analysis. It is probably the one that will make you more money than anything else, and we explain it in huge detail in the Forex program. It's a massive application of VPA, and just saves you from those awful emotional responses to getting out of a position, because that's what kills you at the end of the day. It's not the fact you can't trade. What kills you at the end of the day is that you're getting out of trades too early because you're frightened out, and that's a perfectly natural emotional response to have. Everybody has it. We all have it. As soon as we get some money in here, we want to run to the hills and bank it, and it's the worst thing you can do. Because invariably what happens, you get the rally and it carries on. You get the rally and it carries on. And by the time you're down here, you know, you're regretting all. You think, oh, why did I close out so early, idiot? Next time around, you try and do it again. Now, maybe next time you get caught. With volume, it tells you what's going to happen next, and it gives you that confidence to hold a position and stay in. Because what happens if you're constantly closing out too early, you end up with, in 10 trades, you might have, I don't know, 3 or 4 winners and 6 losers. The 6 losers will be small, but then if the 4 winners are small also, the trade, your overall position, your overall money position is going backwards slowly, but it's going backwards, it's declining, it's not moving forward. You can lose 7 and win 3, but as long as the 3 winners are pretty big and the 7 losers are pretty small, your account's going forward. That's what it's about, and that's what VPA will do for you. It's just so powerful. Can't stress it too strongly. So that's where we are. That's where the indices are finishing off tonight. Just very quickly to wrap up with all the bits and pieces. Where are we going? Where are we going? Over here. This is where you'll find Anna over at annacooling.com. You'll find all the books here. They're all up on Amazon. They're in either Kindle or paperback. Hugely humbling to see the number of comments up there now. I think there's 2,200 comments, many 5-star comments. People have said, you know, it has changed their lives, it's changed their trading. In fact, I read one the other day which really made us smile, because the contributor had said that he was about to give up trading, and he read the book and it's completely changed his perspective on everything, and now he's trading successfully. So it really is humbling to see. So you find them all there. I've got some box sets there as well. You can register for the stock program up here. As always, the stock program is taking a lot longer than we planned. We had hoped to have it launched certainly towards the back end of this year. I think it's probably going to go over into early part of next year. That's only because Anna and I like to put in as much as possible. Now, the other thing also with the program is that if you sign up on the first round, everything will be live. It will be live with us, and that will continue. So we will be continuing. There's a lot of live webinars which will be going on and will continue to go on throughout the program and thereafter. Because there is so much to cover, because there is so much that changes every week, because there are so many stocks to look at all the time. So it will be very much an ongoing program backed up with live markets as well, live webinars with us. We haven't decided how regularly they will be, but they will be regular, I can assure you. It might be weekly, might be twice a week, whatever it is, but they will be ongoing and live. So the whole thing will be wrapped around that, and underneath that, underpinning that, will be a huge core number of modules of videos based on the slides that we've done, and I think we're up to 8,000 or 9,000 slides. And just to put that in context, I think there's something like 7,500 on the Forex program, where we're already up to 8,000 or 9,000 for the stock trading program. That provides the guts of the basic stuff, if you like, and then the actual live webinars will build on top of that, and we'll actually obviously talk about it in live markets, and we can talk concepts and ideas and etc., all that sort of good stuff. And obviously it's an opportunity for you to ask questions as here in the live webinars. Certainly register there. In terms of the Forex education program, it's here. All the details are here. We added the funded program last year, I think, or the year before, purely to give our students the opportunity to trade our money. So you trade our money, not yours. Yes, there's an entry ticket fee. It's a one-off fee. You pay that and that's it. There is no risk to you. You're trading our money, not yours, so there's no risk. You keep your capital safe. You trade it the way you want to trade it, and we give you access to our funds. And the way it works is very simple. You can start at one of three levels. You can start with a 5,000, 10,000 or 15,000 account. Here we are down at the bottom. It's what we call the evaluation level. Those are the fees down there, the entry ticket. That's it, it's a one-off fee. You then have access to the funds. It's on MT5. And you have we set you a target. It's a very achievable target. Yes, of course, there are risk and money management rules in there. Once you've achieved that profit target, you then move up to the next level. You move up to portfolio manager level, and we then double the money as you go up. So if you start at 15, I beg your pardon, we pay multiply by 4. So the 15,000 goes up to 60,000 as the next level, and then we go 60,000, 122, 44, 80, right the way through up to 2 million. And you work your way through up the levels, and on each level you will earn a kickback in terms of profit. So as you make profits, we repay you that. You can have that called back on a monthly basis, or however you choose it to be. It's all explained in the program there. But the reason we put that into place was to allow the students on the program to benefit and to put their knowledge to good use and to actually profit, put that knowledge into action. These are all the modules. Psychology of trading I mentioned earlier on, hugely important. And that's where we recommend everyone starts, as a fundamental analysis, relational, technical, and mechanics of trading module. And then you've got all the other live webinars down here as well. It's a huge, huge program. The stock trading program will be equally large, if not larger, in fact, a lot larger. And in addition, we'll also have live webinars ongoing as part of the support mechanism too. So it's a massive commitment on our part, but we have a lot to convey, and we just want you to be successful, whether you're trading Forex or whether you're trading stocks, however you want to trade stocks, whether you want to trade stocks using options, whether you want to trade stocks using ETFs, whatever it is, whether you're an investor, whether you're a trader, it doesn't matter. It's all there, and everything from fundamentals to technicals is covered as well. Finally, the indicators, you'll find them all here at quantumtrading.com. MT45, NinjaTrader 7.8, it covers both licenses. So whether you use 7 or 8, it's all in one. You make the decision. The same with MT45. You have a dashboard, you decide. TradingView, TradeStation, we're currently obviously fully committed to developing the stock trading program. We are actually developing new indicators. We're focusing on NinjaTrader to start with, but those 2, 3, 4 indicators that we develop there will ultimately be rolled out onto the other platforms if they can accommodate them. I think they can. So if you have a full package of indicators, then you will get those free of charge. It's what we offer all our customers. If you have the full package, if you've joined us and committed to us in buying the full package, then our commitment to you is you get all future indicators we develop free of charge. So if you're on NinjaTrader at the moment, you've got the full package, you'll get those in due course, and the same applies to TradingView and TradeStation as we move forward in MT45. Equally, if you've bought 1 or 2 indicators from us in the past and you want to upgrade to something, we always give you a credit. So if you've bought a bunch of indicators and you now decide you want to go on the education program, you get a full credit. You don't pay the full amount. It's just the way we work. We try to be as fair-handed as we possibly can. And as I said earlier on, if you've got an indicator and you're on one platform and you want to move across to another platform, you're MT45 and you want to move to NinjaTrader 7, or you want to move over to TradingView, no problem. Just contact the help desk, tell them what indicator you've got, tell them which platform you want to move to, and we make it all happen for you. And there's no charge at all, because we don't believe there should be. I know some companies do, and I think it's disgraceful. Just my hobby horse. That's it, we're done. Thank you so much for coming along today. I'm sorry it's been a rather long session. Hope you've enjoyed it. Just scanning down, see if there are any other questions. Jose, thank you for that. Where are we? New course for, yeah, it will be VPA. I know you left Brian, but yes, it will be VPA, very much VPA. That's our foundation methodology. And then everything else will be built on top of that. 3 and 6 month bonds, no, they will pay attention to that all the time. Thank you, Jose, psychology program, that's very kind of you. Appreciate your kind comments on that. That again took us a long time to put that together, and we do urge traders to start there. Do you think it's worth trading in Shanghai and Hong Kong? one of the things we explain and in fact we mention it all over the place, is ironically, people talk about the Forex market and say Forex market is 24/7. Well, so is the stock market. It just so happens it's broken up into different countries. So if you're in the US or if you're in another part of the world and the Hong Kong, Shanghai is trading, yeah, absolutely. It's an equity market. Equally, you've got Globex, which trades 24/7. So you always know what is going on in terms of sentiment as far as equity markets are concerned. Using NinjaTrader and Trading Wyman, is there any broker that provides you with the best volume? How can I find out what broker will offer Wyman for trading? The feed, as I said earlier on, the feed we recommend with NinjaTrader is Kinetic. We don't recommend any other feeds because we've tested it to destruction. It's just bulletproof, but more importantly, it provides the breadth of data that you need, and its quality as well. It's not for any other reason. We don't get any rebates. We don't get any kickbacks from it. We have nothing to do. We have no relationship to the NinjaTrader or Kinetic in a commercial sense, other than we obviously develop indicators for the platform. So, we're not promoting it for any other reason. So we promote Kinetic purely because we've tried and tested it for 10 years and it's absolutely rock solid. And as an index trader myself, I can assure you the volume is brilliant. It's absolutely brilliant on the indices, well, across the markets, but I focus on the indices as well. So yeah, it's just rock solid. Let me just have a look. Sorry, I've just lost track of the questions now. Where are we? Oopsie, just scroll that down. There. Gosh, it keeps moving around. I can't actually get to the bottom. Yeah, I think I've covered all the questions actually now. So that's pretty much it done. Yep, there we go. So there we go. Thank you very much indeed for coming along tonight. Hope you've enjoyed it all. And as Annie said, we will see you again next week. Enjoy the rest of the trading week. Enjoy the rest of what's left of this evening. And keep applying volume price analysis, because that really is it's what reveals what is going on behind the price action. So thanks again. See you again soon, and bye for now.